Hey everybody, Smart Silver Stacker here. It's Tuesday, March 1st, 2022. It's 8:58 p.m. right now. We're taking a look at the live charts for gold and silver. So you can see today was a really good day for both metals, significant moves up. Gold over the $1,900 level very nicely. Right now about $1,935. It's given up a little bit of its gains from earlier in the day, but still definitely in the green. Same for silver. Silver over $25 nicely, and it was up over 5% at the highs of the day, so a big day for both metals. This is on continued news of fighting in Ukraine, and gold and silver are functioning as you would expect them to function, as stores of value, as safe havens, as assets without counterparty risk, as reliable stores of value. So on instability, investors are moving into those. And it's not just gold and silver, also crude oil had a big move up today, up well over the $100 level. I think at the highs of the day, crude was up about 10%. Markets are reacting to the instability that we're seeing. They are realizing that energy supplies may be disrupted, that supply chains may be disrupted, and we're going to talk a little bit more about that in just a minute. But I did also want to point out that it wasn't just gold and silver that moved up today. Also, the gold miners had a pretty good day. You can see here the GDX ETF. This is an ETF made up of gold and silver miners, and it was up on the day as well. So I think that's a good sign. Gold and silver miners have kind of been languishing for a while, and I think there's really some good value there in that sector, and it's good to see that moving up in conjunction with the metals. Also notably, Bitcoin had a very good day. You can see that on Sunday, Bitcoin was down at around 37,476, and then today got as high as 44,500. Right now, just under 44,000, so it gave up a small amount of the gains that it had from earlier in the day, but still a big move up for Bitcoin. And it's interesting because before now, like when Russia invaded Ukraine, we saw Bitcoin take a dip while precious metals went up, but now we're seeing them both rise in tandem. So what's behind that? Perhaps Bitcoin is showing that it actually is a store of value, or it could also be that on the news of Russia and Russian banks being prohibited from using the SWIFT system, perhaps there's some speculation out there among investors that Russia might be moving towards a crypto-based solution to get around those sanctions and to still be able to engage in international payments. I don't know if there's any truth to those rumors. I have heard a few people discuss that maybe Russia's going to be looking at Bitcoin or some other cryptos, but we shall see. But that could have had something to do with this big move up in Bitcoin, or maybe Bitcoin is functioning as a store of value after all and as an inflation hedge. Only time's going to tell with that one. I think one thing is for sure, though, this continuing geopolitical instability and this economic warfare now in the form of sanctions is going to be detrimental for the world economy. And this headline just illustrates one example of that. This is an article from over at Wired titled, "Russia's War in Ukraine Could Spur Another Global Chip Shortage." The gist of this article is that Ukraine makes a significant portion of the neon gas in the world, and the companies that refine it are mothballed at the moment because of the ongoing warfare and missiles flying overhead. And so they're not purifying the gases and shipping it out. And I'll read you this little bit from the article. So this is regarding manufacturer Cryoin. Cryoin makes neon gas, a substance used to power the lasers that etch patterns into computer chips. It supplies companies in Europe, Japan, Korea, China, and Taiwan. But most of its neon is shipped to the US, the company told Wired. Now analysts are warning that the ripple effects caused by disruptions to Cryoin's supply could be felt around the world. And so we already have a microchip shortage going into this, supposedly related to the supply chain disruptions related to the pandemic. Well, now supply chain disruptions are going to get a lot worse because we have sanctions against Russia, which is a big producer of a lot of raw materials. They mine precious metals and rare earth elements, and now Ukraine, who supplies this neon gas, is not going to be able to supply that. So that may have an effect on microchips, and things that affect microchips really affect almost all sectors of the economy that utilize technology. So this could be a big deal moving forward. So I would expect further shortages. I would expect higher prices in the future for a lot of goods, and it's not just going to be because of supply chain disruptions, of course. The fact that the Fed is creating huge amounts of fiat currency and central banks around the world are printing all this money, that's going to drive up prices as well. But also, when you have them flooding the markets with cheap money, which is then converting over into demand as people try to purchase products, you've got these supply chain disruptions brought on by war and sanctions, and that is going to put pressure on the supply side of things. So it's a perfect storm for economic hardship, no doubt. And everybody out there watching, I just hope you're all getting prepared. And if you guys are enjoying this video so far, if you're getting some value from it, please do give it a big thumbs up down below. I really appreciate the support. And while you're at it, if you're not subscribed already, why not click that subscribe button so you can see more videos like this one in the future. Another significant economic effect that we may see as a result of the ongoing conflict is now I'm seeing lots of headlines, lots of economists now are talking about the Fed being a little bit easier, a little bit more dovish at the FOMC meeting that we have coming up here in March. And I mentioned this in a video I put out a couple days ago. The video was titled, "This Has to Happen Before Gold and Silver Make a Big Move Up." And what I was talking about was that the Fed is going to have to reverse policy before gold and silver really see the big moves up. Meaning that they're going to have to basically abandon their plan to raise interest rates, and they're going to need to expand asset purchases and expand QE. And I do think that we have that coming. Now, we may just see the Fed trying to kick the can down the road further at the FOMC meeting, and they'll be able to use this conflict as an excuse. Stocks had a pretty rough day today, and I think to the extent that we see stocks decline between now and the FOMC meeting that we have coming up in March, I think that that is going to contribute to the Fed wanting to have a more accommodative stance. So we'll see. I mean, we might get an interest rate increase. I definitely think that the 50 basis point increase that some had talked about is probably going to be off the table. If we do get one, it'll probably be 25 basis points, but we might see the Fed go ahead and kick the can down the road again. And again, I think that'll largely be predicated on what the markets do between now and the meeting. If there is softness in the markets, if we see some more big down days like we saw today, I think it's more likely that the Fed's going to come out and be accommodative. But really, what's going to occur is at some point, they're not only going to have to kick the can down the road on raising rates, they're going to have to loosen monetary policy and begin purchasing assets again. And all this talk of getting ahead of inflation is going to go out the window. And so when that happens, you can expect gold and silver to have a big move up. And another thing I covered in a recent video was the risk of cyber attacks. I had mentioned that Joe Biden had been presented with several options for cyber attacks against Russia. And I think that investors and markets should be concerned about the possibility of us being targeted by cyber attacks. And this is an article that just came out yesterday where Toyota had to suspend all of its Japan factory operations after a suspected cyber attack. Now, the cyber attack was not on Toyota itself, it was on one of the manufacturers that supplies them with parts. But Toyota now can't get parts, and so they've had to completely suspend all of their manufacturing in Japan. And this is really an example, one, of the fact that cyber attacks are a real threat, but also just how vulnerable supply chains really are. And basically, what we've moved to over the past several decades is we've moved away from a system that is redundant and somewhat inefficient, where we have storehouses full of parts and the grocery store orders more food than it sells in one day. That is an inefficient way of doing things, but it is also a lot more resilient. But nowadays, everything is just in time. Everything is super efficient. We've gotten very good at building cars efficiently. At Toyota plants, they don't have stockpiled parts. The parts go right from the shipment, from the loading dock into the assembly line. And Toyota actually has pioneered some of those just-in-time delivery practices, and it's great when everything is working well, but when things don't work well, you can see we get one cyber attack at a company, not even at Toyota, it's just at one of their suppliers, and it shuts down the whole operation. So again, with rising levels of instability, with the threat of cyber attacks, with a very vulnerable just-in-time delivery system, expect prices to continue to move up on a number of goods. I would expect certain goods to become unavailable, so if there's anything you think you're going to need to purchase within the next year or two, you might want to go ahead and just make that purchase now while prices are low and while things are available. Even though I know prices are not as low as they were a year ago, I expect a year from now the same will be said. I just think that now is a good time to prepare yourself for further economic disruptions. And one way to do that is to stack physical gold and silver assets that you can't be sanctioned from. The government can't come in and shut down your gold account. You have the gold. You've got your physical gold. So barring a confiscation or something along those lines, you're pretty much safe. And you might always have a boating accident. And if you're a stacker, you know what I'm talking about. Wink, wink. And of course, guys, none of this is financial advice or any kind of advice, really. It's just for educational purposes, just food for thought. I'm just telling you guys what I'm thinking about. And to me, you don't really need geopolitical instabilities and wars and economic disruptions and sanctions to want to get your hands on some sound money. The $30 trillion national debt, the 125% debt to GDP ratio is plenty of motivation for me. I don't know about you, but when I see numbers like this, I want to get my hands on some gold and silver. All of those factors, the fact that we're printing money like crazy, the fact that we've got out of control spending, out of control debt, and out of control annual budget deficit, I think all of those reasons are sufficient to want to get your hands on some gold and silver, and I think that those factors will be driving the price of precious metals much higher in the near future. Geopolitical instability and economic warfare and cyber attacks certainly provide plenty of additional incentive. So what do you guys think? Why are you stacking gold and silver? Do you think that we're going to continue to see a bull market in gold and silver? Are we going to have some more trading sessions where we get moves up like this? Or do you think that all of the risk is priced in at this point? Let me know what you think in the comments down below. If you enjoyed this video and you'd like to see more videos like it, then check out the ones that are popping up on your screen right now. Thank you all very much for watching. I will catch you guys next time. Don't forget to like, comment, and subscribe. Smart Silver Stacker, out.